Greetings and welcome to this lecture on journalizing job costing. Our objectives for this lesson are to record the flow of material costs, labor costs, and overhead costs in job order cost accounting, and to record adjustments for overapplied and underapplied factory overhead. Now, in separate lectures, we've talked a good bit about the cost flows concerning materials, labor, and overhead. In this lecture, let's take a look at the actual journal entries for a job order cost system, and to keep things simple so that we can focus on the accounts, we're going to omit the numbers and just use X's so that we can see how things flow. When you purchase materials to use, either for direct materials or indirect materials, your journal entry will be a debit to raw materials inventory and a credit to accounts payable, or to cash if you pay cash for the raw materials. Now, in terms of assigning costs for direct materials, in other words, those materials that we can assign specifically to certain jobs, we will do that and debit goods in process inventory and credit raw materials inventory. For indirect materials, in other words, materials that we know are used in production but cannot be assigned to specific jobs, we will debit factory overhead and credit raw materials inventory. When we pay the employees that are involved in production, we'll debit factory payroll and credit cash and all other accounts, which would include your various payroll liabilities, such as FICA withholdings, federal tax withholding, state tax withholding, and so on. Now, to allocate the factory payroll for direct labor that's used and can be assigned to specific jobs, we'll debit goods in process inventory and credit factory payroll. For indirect labor, in other words, factory labor that cannot be assigned to specific jobs, we'll debit factory overhead and credit factory payroll. And with these two entries, we will eliminate the balance in the factory payroll account. To record factory overhead costs, we'll debit factory overhead and credit prepaid insurance, for example, for the factory insurance for the accounting period. We'll credit accrued utilities payable. We might credit cash for any types of factory overhead items for which we paid cash. And of course, we'll credit accumulated depreciation for the accounting period's depreciation expense. Then we will apply the overhead using a predetermined overhead rate. As we do the jobs, we'll apply the factory overhead and debit goods in process inventory and credit factory overhead. So the debits to factory overhead occur when we allocate indirect materials to factory overhead. We debit factory overhead when we allocate indirect labor, and we also debit factory overhead when we pay or accrue the various other overhead expenses that don't involve materials or labor. And then we credit the factory overhead account as we apply overhead on our various job orders using a predetermined overhead rate. When we complete jobs, we will debit finished goods inventory and credit goods in process inventory to move those completed jobs from the goods in process inventory to the finished goods inventory. And then as we sell the products, we will debit cost of goods sold and credit finished good inventory for the goods that we actually sell or the jobs that we have sold. Now, at the end of the period, it's most likely that your actual overhead costs and your applied overhead costs will not be the same. In other words, there'll be some balance, either a debit or credit balance, in your factory overhead account, meaning that overhead has either been overapplied or underapplied. So in this example, let's say that factory overhead was underapplied, in which case you would have a remaining debit balance in the factory overhead account. To eliminate that, we would debit cost of goods sold and credit factory overhead. If we had a residual credit balance in the factory overhead account, that would mean that we applied more overhead than the overhead actually cost. In other words, overhead would be over-applied. And in that case, what we would do is debit the factory overhead account to zero it out and credit cost of goods sold to lower it to the actual amount. Let's review. In this lesson, we set out to record the flow of material costs, labor costs, and overhead costs in job order cost accounting, and we recorded adjustments for over-applied and under-applied factory overhead. That wraps it up for this lesson.